So this 51 shares in NVIDIA on this particular idea is the right amount of shares for the risk and the stop loss that we're looking at on this particular trade. So now we move down a little bit further, and you can see the capital needed for this position to put the trade on, assuming no leverage or anything like that. And then we also have the dollar amount of risk. So really what this is doing is it's giving us the whole trade scenario before we put it on. And then you can see actually on the bottom there, the advanced trade management is really getting to the next part. What happens actually when we're actually in the position? What do we actually do at that particular point? But before we put the trade on, we already know that worst case scenario, this 174.44 is where the swing trade will be exited. So we already know that. We're willing to risk that. We're willing to accept that prior to the trade happening. Now, this is the big thing that I really want you to write this down. Again, I'm big on notepads. If you got a posted pad, write this down. You do not need to take big risk on your initial entry, but you absolutely want to get more if the stock is validating your idea and your edge is following through. So you're essentially getting bigger when it's working, and you have less shares if it does not. It's the world's greatest math formula that we could all learn in like third grade.